Hi guys, welcome back. It's LSP. It's currently the 1st of September 2020. It's been a very long time since I've posted anything publicly on YouTube. It's the first of the month, so I thought, you know what, I've had a nice holiday. I have a nice break over August. I don't trade over August, so I've just been relaxing and switching off, and I thought it'd be nice to just put something out there, just go over a few ideas, just give you guys something to think about. And as always guys, if you find value in the content that I'm sharing, please give the video a thumbs up, subscribe to the channel, it all helps. So with all of that said, okay, I'm not going to waste your time. I'm going to keep this video short and brief. As you guys are, very well aware, I do spend a lot of time on the higher time frames, and I just want to kind of give you guys something that you probably won't hear anywhere else. So we can just put this to bed. I know what I'm doing. I've been trading for a while, and it's not just a rehash of other people's material, because I had a bit of an exchange with somebody on one of the previous videos that I posted, and he left some comments, and I don't know how this guy, I don't know how he got my email, but I'm always saying what the email is. So he emailed me and had his, 2 pence worth, and I just said okay and just moved on. But, it's not just a rehash, okay? This is about awareness of the trader themselves, okay? The trader themselves has to be aware of what they're doing, and as you know, I'm a very big fan of putting everything and all the blame on the trader, okay? The trader is responsible. Everything else is just noise, really. But you have to have an intuitive understanding of what you're looking at. Okay, so we'll just use cable. It's a popular one. All right, so we've got the weekly. Take the dividers off. So when we're looking at a chart like this, okay, we're looking at the weekly chart. There's a lot of things that are going on this chart, and I'm not talking about the candlesticks. Okay, I'm talking about what you don't see. I'm talking about the understanding of what the weekly chart is. Okay, yes, in its basic form, a weekly candle represents 1 week's worth of trading. Okay, great. But what don't we see? We're not seeing the understanding of the ranges, how long they form on particular pairs. What does that mean in relation to the lower time frames, and so on and so on and so on. There's a lot going on. Okay, it's not enough to just say, looks like it's going higher. You had a really nice drop here. It's retraced pretty much most of the move. You do your analysis. Price is sitting around about here, and you're saying, okay, I think it's going to pop and take out this high. Okay, that's not enough, because when you drop down to the lower time frames, you also need to understand, when you're looking at the weekly, that the ranges are larger, which means your risk reward has to be larger. This is why traders drop down to lower time frames, so they can find tighter entries. Okay, so they can use the same size or more and still risk the same amount of money. Okay, and keep their risk the same. This is why we use the lower time frames, and also for confirmation of higher time frame ideas. But in the end, like I said, if you don't understand the fundamental principles of what's going on the weekly chart, what they represent, how they form, the underlying ranges within each particular cross that you're looking at, or each particular pair that you're looking at, whether it's a major, minor, or an exotic, and when you start to piece all of these things together, you start to realize, okay, that most of the time when you're looking to open a trade, you're not always, but you're already behind before you've even started, because of this lack of understanding. So to give you an example of what I'm talking about, right? When I look at this weekly range here, okay, or this section here, you're talking about 1, 2, 3, 4, 5, 6, 7. Right, and we'll take this down candle as well. So we're talking about 8 weeks worth of trading, right? So that's 2 months of data. Now, 2 months, within this 2 months, you are talking 1,000 pips. Okay, so within that 1,000 pips, if you drop down to a lower time frame and you were to take, for example, this section here, all right, and you just drop down to the daily. Okay, and this is what it looks like on the daily, and you say maybe there's a potential trade here, taking this high out. There's a potential trade here to take something on the left over here, and maybe there's a couple of trades there within that 2-month period. Maybe if you drop down to the 4-hour, breaks things down a little bit more, and you look at this and you say, I can see, maybe based on my own personal understanding, what I like to see as a trader, blah blah blah. Maybe 6 trades or 5 trades, yeah? But can you see the dynamic of what's just happened? When we start on the weekly, we are looking at ranges like this and we're saying, okay, there's a potential trade here. Maybe the reward's really, really large, but the risk is also large as well. But if you don't understand how that range works and how to transpose that understanding, not the idea, the understanding, onto a lower time frame, daily, 4-hour, hourly, 15-minute, whatever, then you're wasting your time. You're already behind and you've already lost. You have to have that basic understanding of these higher time frame principles, all right? So where do we start? Yeah, my suggestion, and this is something that I did, whenever I do a study, I try to do it for at least 6 months, because it's enough to catch a couple of cycles, as price is moving around, on a macro scale, sort of thing. But what I did with the weekly chart, I said, all right, at the end of each week, I'm going to try to deduce which direction price is going to go for the coming week. Yeah. So this week, for example, I'd look at previous data, okay, and I'd say, okay, looks like it wants to go higher. This move's been negated. I'm just using this as an example. Looks like it wants to go higher. When the week starts, so it's Tuesday. Sunday, opens. I think I'm going to get a larger weekly range to the upside. Yeah, I think price is going to run higher. Forget why. Forget whether I'm right or wrong. It really doesn't matter. What I want to know is when I drop down to the lower time frame, so I can get an idea of how this weekly is moving around, to get a feel for these ranges. I want to have an idea before I've started. I don't just want to aimlessly look at a chart, wait for the week to finish and say, oh yeah, look, it finished higher, or oh look, it finished lower. I want to plan a study for the week, an actual proper study where I'm going to take notes and I'm going to really be meticulous about what it is that I'm looking for. Even if I don't know what I'm looking for, when I see something of interest, I'd make a note. I make a note on the charts. I screenshot. I save it in a file. But I do that for the whole week. So I'm going to go over to Euro, so we're not just bouncing around just on one chart, because we can see what just happened on that. I haven't looked at Euro today. So here's the weekly of Euro. Okay. It's a little bit messier, which is good, right? Which is good. It makes things a little bit more interesting in terms of a particular study. So my suggestion would be this, in terms of studying one weekly range and seeing how that unfolds on multiple time frames, so you can fuse everything together. Okay, and you have to do this multiple times, obviously. As I said, I do this for 6 months or so. Whenever I'm studying something or I have an idea, I try to do it for a month. So I look at this. This low was taken, but a really nice pop here, really aggressive drop. Okay, price is seeking liquidity very, very quickly here. Gets very, very messy. Okay, and then it rips to the upside, shallow pullback, and then it starts to grind higher. Okay, it takes out this. This is pretty interesting. Very, very nice, strong week here. Okay, that's good. We had all of this liquidity above here. That's just basically been traded to, through, and still traded at. Okay, above us, we have a section of price action here. Okay. This big block of consolidation here, okay, which is efficiently traded. There may be a reason price wants to grind up there. And again, you see, I'm being very loose with my definitions, okay? We're not trying to be right. Forget our ego. We're trying to study. We need to understand price behavior, okay? So we see this, and I'm like, okay, maybe it wants to come up here. So I'm going to watch this week, all right? I can see, there's a small section of inefficiency here. Okay, so we have this imbalance over here that may want to be rebalanced. There's another one here before it gets to this consolidation. Okay, great. So we pay attention. So we take this week and we say, all right, I think price wants to go higher maybe, yeah, for this particular week. It's still Tuesday. I've got Tuesday, Wednesday, Thursday, and Friday left to go. Yeah, around about 3 3/4 trading days to go. So we'll drop down to the daily. All right, zoom out a little bit. Kind of got this idea that this is where it wants to go. Okay, great. So we start to break down each individual day. Right, and the best way to do this is you put your dividers on and you start to look at the week, the way it's unfolding. Okay, on the 4-hour, and you can see that price. It opened, it dipped a little bit, okay, and then it started to grind higher. Okay, dipped a little bit more, rebalanced, pops again, let's come all the way back down again. So we're watching, excuse me, we're watching price behavior on the lower time frames, and we're trying to deduce whether or not price is going to a level or away from a level, something that we're interested in. And in doing so, we will start to notice the small nuances. So for example, just looking at this small section of price action so far, Monday and Tuesday, we can see we have that upper level that price may want to go to, right? It's a loose idea. It's not something that we're getting excited about. It's just a loose idea. We're doing a study. So what are we seeing? Are we seeing confirmation? We don't need a level to see confirmation of an idea on a lower time frame. When we're looking at the hourly like this, the candles tell us everything that we need to know, and it's all in the wicks. Pay attention to the wicks more than anything else. Pay attention to the wicks. And I'm not going to go into that because I have a whole massive hoo-ha, and a very, very long library of videos, where I discuss in great detail, wicks and what they do, and not the way they form. Forget that. It's what it's doing within the context of the big picture, and then transposing that onto all time frames across everything, and that gives you everything you need to know. I'm telling you, just study the wicks, So anyway, you can see, we opened this week. Forget Sunday. Opened this week. Had a nice little dip. Okay, then it starts to go up. All right, comes down, starts to go up again. So we've had a pretty decent Monday so far. Comes back in a little bit deeper, okay, then starts to slow down towards the end of the trading session, and then we get rollover, and then we get a really nice pop during, I'm assuming that's quite early, so that's during Asia, and since then we've kind of overextended just there as it shot up just to reach for liquidity very quickly, and then it's come all the way back down and it started to seek liquidity elsewhere. Okay, so this may very well have been a news release. I don't know. Like I said, I've not long been back. I've got no interest in trading right now. I'm just going to let things settle for a week, and then I'll get back into just sort of euro and pound. I try to stay away from the charts. I've only looked at them briefly, so this is all fresh to me as well, and I like it that way. So we're getting a bit of a stronger, a more aggressive pullback. Okay, and it's obviously the point where it's released here, the point of origin. We've had this really nice breakout just there. We've come all the way back down to that area where we know there could potentially be an area of demand, an area of liquidity, and the tail there, the wick, is a good indication of that fact. You can see that price came down, it's hit this level, and it reacted from that level quite nicely. So something happened there. We have no idea what. We're not interested in trying to figure it out right now. We're just interested in keeping an eye on the behaviors in price, trying to get a good indication of what we're seeing and what does that mean for us. How can we internalize that and then use that going forward to have confidence in the trading decisions that we make? So we see this nice little drop. Something obviously happened here. All right, nice move up, but maybe it wasn't enough. Maybe whatever happened here, whatever's it's done here, whether it's picked up more liquidity or whether it's sold or whether it's bought, I don't know. But what I do know is what's happening after that. So I'm seeing this. We had a nice reaction from that, but it may not have been enough because we can start to see price coming down again, right? It's looking like price is going to want to maybe potentially retest this. Now the range that we have to work with is minimal. It's like 10 pips. So that's nothing. For euro to just have a quick pop down there and sort that out, it's really not an issue. It could come down, just tag that little level and just reverse a little bit, and maybe slow down because it is getting quite late in the day now. It's around about 5:30 GMT time. So we will start to slow down a little bit. So what does that tell us going forward? There's a larger range now. We have a larger range than the previous day, and it's a more volatile range. When you look at it this way, we have about 80 pips or so on Monday, and then today, so far, we have around about 75 pips. The difference being the range that it's been through on the day. So this is more fluid. You can see it's kind of sorting out, facilitating trade as it's going up there, both sides of the market. This is just boom, boom, It's a bit more aggressive on the day, okay? It's a bit more aggressive on the day. So that gives us some things to think about going forward. With price popping here, reaching, and then coming down and dropping here, and then slowly starting to grind, okay, there is pockets and levels within all of this where price has broken, and you can see that on the lower time frames. If I just drop down to the 5 minute, just to give you an idea of what I'm talking about, you can see the breaks, ran, pauses, ran, break, ran, break, run, break, 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 takes ages, starts to get a bit messy, overreaches, reverses, drop, 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 break, and then drops again. When we're looking at the hourly, we don't see that. Yeah, we just see a move up and then a potential move down. Yeah, so up and down. Yeah, so we know that there's areas, right, where price, go back down to the 5 minute. We know that there's areas of price, you know, where price has stalled, it's stopped, it's, there's breaks in the price, and then as price starts to retest these levels, we can see which ones are of significance. We can see that this one's of significance, has to be, because price went up there, it tagged it 1, 2, 3 times, and then it started to move slowly away from that. So this is an interesting level. So what do? We make a note of this level. Remember, we're not interested in being right. We're not trying to figure we're not trying to figure out the code. We're not, trying to be Neo from the Matrix. We're engaging in price. We're trying to figure out what we're seeing, and then whether or not that's of use to us going forward. What does it mean? It means something completely different to me, just as it might mean something completely different to you and a whole host. I mean, every trader looks at this and might think, well, that's this or that's that. Yeah, I know what it means for me and how I can use that information because I've studied this, for many years, like this, like we're doing now. So you can see as price came down, it respected this area here, all right? It respected it for a while. Don't have to be exact. I have no idea exactly where, but it came down and it respected this level and we had a really nice reaction away from that. But what's interesting is as it came back down again, it went straight through that. Yeah, so that level ceased to be a problem. There was no issue there. It just ran straight through and then spent a little bit of time here and then kind of slowly started to move away again. So the fact that it took this low here on that move right there, all right, is interesting. And how does that, in relation to over here, how can we use that information going forward? All right, again, just throwing out ideas. We had the overreach here and then it starts to drop again. All right, this is pretty much one giant consolidation, so we're not really interested in that. And I say giant consolidation relative to everything else. And it pauses here at another aggressive seeking for liquidity here. Okay, then it gets a bit messy. It comes back up. Interesting level. Okay, 1, 2, 3 taps. Move away. Now we're starting to go for that low. But that initial drop here, where does it stop? Just here. All right. So as it's already gone through this area already, so it's tapped into it once. Yeah, it's going to be weaker on the second attempt, and I'm not interested in this one because it's a bit of a shallow rally. This is the one I'm interested in as it came from here and then down again because it did something here and then it starts to come down. So it's very likely that we're probably just going to take out this low and all of this low, but the other question we can ask ourselves is, could we have seen this before the fact? Yeah, would this have been enough? Yeah, do we need to wait to see this first before we consider it? And if we do, isn't it better to see it on a higher time frame, hourly or 4 hour? Because when we do that, that range from here to here is no longer 30 pips, maybe it's 90 pips. And then that 90 pips range is enough for us to and then that 90 pips range then becomes better for us because we can wait for something like this to happen, figure it all out. What does it mean? Is it conducive to good trading? Does it make sense for me to to potentially use that information as a starting point to take a short, for example? And then as price starts to come down, maybe we pick something up here on that last portion of 40 pips, yeah, on the 4 hour. And then we drop down to the 5 minute. This is all broken down again, and then we find a nice little entry. So these are just ideas, okay? They're just ideas, guys, that I wanted to share. It's been a while since I've posted something, but I wanted to just kind of throw something out there because, there's lots of different ways of studying price, and it's not just a question of listening to somebody and, saying, okay, well, that sounds great. I'm going to go ahead and do it. I'm going to try that. It's about engaging. It's about studying. It's about watching a live price, movement and figuring things out. And once you've figured them out, you test your theories. And you test it safely, and then once you've tested your theories and you have a good idea of what you're seeing, okay, It builds your confidence, because then your results start to be more positive, and then when you have more positive results, again, you can go back and you can readjust, and you're always constantly fine-tuning your trading habits, your trading ideas, your trading technicals, to a point where you get, when you finally get to a point where you're confident, you're consistent, and you are objective and emotionless when you're opening trades, because you understand the ebb and flow of what you're seeing. All right, guys. So I hope I didn't take up too much of your time. I do really appreciate you guys spending the time and taking the time to watch these videos. And I wish everybody all the best, and I will catch up with you at some point soon, I'm sure. Take care, and I will speak to you soon.